Rightio, happy Monday everyone. Hope everyone's doing all right. Remember, hit that subscribe button before and hit the bell icon before so you get notified on future videos. I'm just trying to really run through this really quickly because we are about 20 minutes before the start of cash equity trade in Europe. Um, so what happened? I mean it's pretty clear to everyone right now, isn't it? Inflation print out of the US came in way hotter than expected, and this after, we've had the really hawkish Fed basically, and this is primarily due to the price of energy. So is basically that issue going to be resolved anytime soon? Well, the war in Ukraine is still going on, and we're not seeing this subside anytime soon. We're also uh, and the thing is, crude prices remain elevated. At this moment, what we saw is, I mean, it did take quite a dip, during APAC trade. This is a daily chart, so this is a daily candle here. It opened and just crept down, but we are being supported on last week's low at the moment you know this is and this is also due to the fact that we're seeing Shanghai putting on more basically the partial lockdowns that they lifted are now back on because of rising cases, and the same is going on in the basically the Middle East. Dubai has put on a you know what do you call this, like a wear your mask and all these things because cases are rising. So what happened with the inflation print going absolutely off the charts? Well, obviously the Dixie just went on a rampage. We are way above 104 at the moment, and is continuing that surge. Why is this happening? This is due to the fact that okay, there were talks about okay to basically support a growth momentum going forward. We might need to see the Fed kind of like pull back on the hawkishness a little bit, but obviously now they can't. So there are talks, as in maybe the Fed's hands are tied and they they're basically going to lead the US into recession. And if the US, you know, hits into recession, then that's the global economy, getting tied down as well. What we're seeing as well is the yen is just, look at this. I mean, we're trading at 1998 lows, which is so equities gap down. We saw this. Look at this on the Nikkei. That is we gap down. I mean, it's basically all major bourses. And this is the E-mini S&P, also a gap. We're just trading at this low here, about to get tested. Will it hold today? I don't think so. But will I try to? I would want to see this, a try on basically filling this gap before we continue the move lower and seeing whether Dixie just maybe make a pullback or just consolidate a little here and make a support line around the 104s. But if you ask me, if we're going to see that, or we're just going to see a continuation, there might be fears in the market that might propel the market to just keep on going. To be honest with you, um, so in terms of, I mean, look at this Nasdaq. I mean, this is a 500 tick chart just to give like a flavor of how this is basically the electronic open. Bam, open, down, just kept on going. That is the state of affairs where we're seeing at the moment. So and we're seeing the euro as well because of the a little bit of a pullback from Lagarde last week because we did see an increase of basically the rate decision, a hike, but Lagarde's not completely holding on to a prior hawkish stance. So I hope this was useful. Any questions at all, just hit me in the comments, or join us in the Discord room where we basically just talk about this head on. All right. Have a good day ahead. Have a good week ahead. We have the FOMC on Wednesday. So for details on, other, sorry about this. So on other, basically pertinent data points on for the week ahead, just head over to the morning read on the Dome Capital site. Cheers, everyone. This is Reed with the Daily Briefing.